Ladies and gentlemen, there are a ton of new SoFi investors and people that are getting interested in this company as they've seen the massive rise in the stock price over just the last couple of months. Now, one of the questions that I really get on a lot of my live streams is, hey, Tanner, what is the real competitive advantage to SoFi? Because to me, at first glance, it looks like just a regular fintech or bank. So that's exactly what I want to talk about in this video, and I created a presentation to help sort of address some of these concerns. So whenever we look through this presentation, what I want to keep in mind is that this is not all of them. These are just the large competitive advantages that stick out immediately for people to get a basic understanding of why SoFi is very unique. Okay? First off, a powerful flywheel effect. Now, SoFi has been able to gather new members on at a very quick pace, going from the first quarter that we saw public data at a Q1 of 2020 at just over 1 million users to now today just over 9.3 million and expected to cross 10 million after Q4. As we go on, what you'll realize is that SoFi has had sort of a shifting event. They went from being a student loan company to a student and personal loan company to being a full-fledged financial services platform that has checking accounts, brokerages, credit cards, budgeting software, all the different loan types, insurance products, everything that you could possibly need all in one digital app. They call themselves the one-stop shop. It all starts with the checking account product because they want to get people onto the platform at a low customer acquisition cost. If you come through the platform wanting the checking account, then they might end up paying anywhere between $40 to $200, depending on if you're just signing up for SoFi Money, or if you're actually getting a direct deposit relationship with them. But then if you potentially end up going through SoFi through a personal loan product and they want to pay for a personal loan for you, that could be upwards of thousands of dollars in referral costs just to get you on the platform, to get you signed up and originated through SoFi Bank. Okay, so they want to start here and branch out into as many products as that you could possibly get into, as well as sub products within these product categories. This is a very old slide that SoFi started to use to show off how they wanted to get people onto the money platform or the checking account product, and how the overall profitability of this product was not great, but the customer acquisition was really low. Then, if they were able to get them cross-sold onto a personal loan, this is how you really skyrocket the profitability of a per product member. So if you're able to have a cross-sold member that has a SoFi Money and SoFi personal loan, you can get them in the door for cheap, but end up ramping up their variable profitability because of those personal loans. Next, since being a public company to today, they have ramped up their profitability on every single margin category, whether you're looking at this from a contribution profit margin, so on a per product basis, or if you're looking at it from an adjusted EBITDA standpoint, or just straight net income margins. They have gone from, abysmal negatives to absolutely positive numbers, while growing members from 1 million up to 10 million members by Q4. You could see this in the raw numbers here. They've grown the business from 200 million of revenue a quarter up to nearly 700 million, and net income being in large negatives at one point, being costly of negative 177 million to now bringing in over $60 million of profitable income each and every quarter. And because they ended up wanting to be a one-stop shop, what they also were able to achieve was diversification. So you can see that lending and financial services actually makes up for nearly 67% of revenue and 33% of revenue whenever looking at SoFi Bank. Okay, so that added amount of getting the checking accounts and getting the brokerage accounts and credit cards and everything not only adds their ability to lower their customer acquisition costs and enable them to get cross-selling abilities that also enable things like better cost of funding for the loans, and we'll talk about that. But it also just ends up adding a great form of diversification for their revenue. This is very unique whenever you're comparing it to other fintechs like Affirm, Dave, Current, or MoneyLion, that these ones don't actually have a lot of diversification, and they've done a lot of their real revenue creation from things like interchange or buy now, pay later. But let's move on to strong regulatory compliance as number 2. Now, first off, SoFi is a fully regulated bank. This is very unique amongst fintech and also allows them to service their loans much better. Now they can actually hold loans for much longer periods of time on their own balance sheet, which not only reduces the amount of risk, but also enables them to either choose to hold on to loans or sell them whenever they're at a better gain on sale margin. Not only that, they can also lower their cost of funding by not having to just go out to get corporate debt, but also fund it through their own customer deposits. This is an amazing advantage whenever you're in the lending segment as well. Now, whenever we look at who else is doing this, it's few and far between. Fintechs with fully chartered banks, you see SoFi, Lending Club, and Vero, okay? And of scale, SoFi is the only really large one there. Whenever you look at the ones without fully chartered banks, you see literally everyone else in the fintech space. Even companies like Block does have a segment of a bank charter, but it's not a fully licensed bank charter. So they still can't take customer deposits. They still have to partner with other banks to do that. It's just a little added benefit to them, still nothing like what SoFi has. And for the longest time, these rent-a-charter strategies have worked, but that might not always be the case. Synapse was a company that ended up connecting fintechs to banks that just recently went down due to bankruptcy. Then there was this massive amount. According to this article, $85 million of customer savings are just simply missing because there was no actual data sharing between the fintechs and the banks. It was being held by this middleman that simply went away. So these are massive third-party risks that can burn a lot of these companies, and a lot of them were actually within this list. Okay, so a lot of those customers are angry and they want out of these fintechs and they're looking for fully chartered banks to reduce those risks of some middleman that ends up going down. Not to mention the massive political changes that have been trying to go after companies like PayPal for decades now to try to operate similarly the way that large financial institutions already do. But if SoFi is already a fully chartered financial institution, they won't have to make any of those changes as things start to change. These, by the way, are already in effect with the banking as a service industry getting a massive hit after the Synapse bankruptcy. Now, the next one, superior technology stack. This is where SoFi really begins to shine. SoFi ended up acquiring two separate businesses, Galileo and Technisys. Galileo is the one that's going to help with all of the payment sides of the business. So the payment gateways, the money movement, all going to be done by Galileo Financial Services. Whereas Technisys is going to help with a lot of the UX UI design, as well as the back-end design to help the function of the bank work a little bit better and be fully cloud native. Whenever you're talking about the biggest players in the space, SoFi versus the incumbent banks, they're all on Gen 2 banking, or at least for the most part. This makes making new products very cumbersome, and whenever you have to pay out to all of these different core providers for all of your different services, it's very hard for them to talk to each other. So a lot of these banking institutions do not have holistic views of their customers, which makes them very hard to service. There are companies like Technisys that service companies back end that are getting them cloud native. Okay, there are other companies like Galileo that service the payment sides and set up card programs. There are no companies that do both. SoFi is the only company that is servicing both, and they are a fully functioning bank that can also offer other services as well to some of their fintech partners. But let's move on to some of what Galileo has been working on. So this is a very fast-growing segment of their business, or at least has been in previous times. We have gone from Q1 of 2020 of 30 million users on their platform to now hitting 160 million accounts that have been set up under Galileo Technologies. They expect to actually start to accelerate this growth as they cross-sell it to Technisys' existing client base and vice versa, with Technisys bringing their services over to all the clients that Galileo has been servicing. But this isn't a standalone product. SoFi bought them to accelerate their own product map. So they're going to be driving faster innovation because they are working directly with their own technology provider that is in-house. It's vertically integrated. And through SoFi's own challenges of servicing 10 million customers, they get a better understanding for what members are looking for the additional 160 million users that are on Galileo's platform, further accelerating their product roadmap. But that's not all. SoFi's own products like loans, brokerage, and their Lantern marketplace is also up for offering to the 160 million users. It says 50 million, but this is just because it was an old slide that I had taken. Obviously, Galileo has grown a lot since then. I want to also talk about the loan platform business that has just recently been unveiled. SoFi is now underwriting other people's loans and allowing them to be put directly on their balance sheet. So SoFi does not have to take the risk, and they can also underwrite loans that potentially they would never have taken on for themselves. Once again, this is furthering how fast SoFi can operate, and it is much faster than any of their incumbents. But with the addition of Galileo, could there be a possibility where SoFi has the loan platform business and also does this for Galileo's clients? Not only will we offer you a card program, but we also have underwriting services that might be better than what you already have in-house. It also doesn't hurt that SoFi is only in the United States of America and a little bit in Hong Kong, but Galileo is all over the Americas in multiple continents. So, as you can see, SoFi might be able to expand into Mexico, Canada, into Colombia, into all of these different areas where both Galileo and Technisys are all servicing these different industries. One, Galileo is going to bring Technisys into new geographies. Technisys is going to bring Galileo into new geographies, but that entire tech stack might end up bringing SoFi into all of these areas as well. This is unlike any other fintech or bank that has this type of capability. And then lastly, what does this all tie into? More growth, more revenue, higher margins, more diversification. So this is actually what SoFi's revenue looks like. They're not just a bank. They also have a technology platform that also further increases their diversification. So if there's any downturn in lending, or if there's any, sort of mismatch with their financial services products, Galileo will also be their added benefit to sort of help them grow along the way, even if other areas of the business take hits. And SoFi is also the benefit to other industries as well. Look at Marqeta, for example. So they are a sort of pure play of what Galileo has done. That stock is not hitting new highs the way that all of these other businesses are. They're actually being held down very strongly right now because the technology services are not doing well. So where Galileo has underperformed in the recent years or so, the SoFi Bank has really exploded. But there will also be times where the technology platform outperforms and the bank might not do as well. This is what diversification shields us against. No pure play fintech has this type of diversification, and it really helps the business. This is the ultimate endgame, the AWS of fintech. One, you have your payment provider from Galileo, your core infrastructure from Technisys. You can even get issuing bank cards and custody deposits through SoFi Bank. So it is the trifecta of what the AWS of fintech could be. You could go to SoFi as a brand new fintech and say, hey, I need everything set up. I need the actual software to get me started in the core infrastructure. I need the payment services, but I also need help issuing cards and taking deposits. How can you help me? And they'll say, here's the entire thing. We can get this completely started for you from point A all the way to point B with perfect scale through the cloud to allow you to be servicing, a couple 100,000 users to a couple 100 million. That is why SoFi has a superior technology stack. But lastly, whenever we go back, what really also just separates SoFi is their unique member demographic, okay? Whenever you look at SoFi in general through their own bank brand, what you'll see is that people are not happy with the current banks that they're with, and they're also not that happy with their fintechs. And SoFi actually places the highest whenever you're looking at Net Promoter Score, or NPS, their satisfaction with the companies that they're dealing with, okay? What you want is very high rates because then they tell their friends, which lowers customer acquisition costs, and it also potentially increases cross-sell. As people need more products, they'll probably trust you to come back if they were already happy with the first service that you ended up giving them. Next, you can see that this is not just a SoFi trend, but an entire industry trend. Whether you're looking at the mega banks, regional banks, community banks, or credit unions, the total account openings in these areas are lowering over time. Whereas digital banks and fintechs have been exploding ever since after COVID. Overall, people are looking for digital bank accounts, and cash is seemingly a product of the past. And SoFi ends up servicing a pretty unique member in this category. Predominantly 100,000 plus earners with 700 plus FICO scores, and at very young ages, between the ages of 22 to 45 is who they try to target. Obviously, they'll take on younger and they'll take on much older, but this is the demographic that they primarily try to market to. And these people are needing financial education. You could be out of college and earning hundreds of thousands of dollars, but potentially you might be having just a little too much student loans at too high of APRs and could use a little bit of help consolidating this debt and saving you some money. What does this lead for SoFi? Well, it's highly beneficial. Okay. These 100,000 plus users have higher deposits, higher assets under management, and higher spending needs. Because of their FICOs, they are usually leading to lower defaults, and the super prime demo is the most sought after whenever you're talking about lending services. Okay. Because of their youth, they also have high rates of growth because they haven't even hit their peak earning years yet, and they won't need a lot of withdrawal needs because they're not, paying out a retirement right now. And then lastly, higher cross-sell as these users end up going into not only paying off student loans, potentially getting their first home, second home, or potentially other services that they might need into the future that potentially SoFi doesn't even offer yet. So yes, if you're looking at each individual product, is there a company that offers a brokerage account? Is there a company that offers a debit card or a credit card? Yes, there's always going to be competitors. But whenever you start to compare them on a one-on-one basis, does the large banks have the youthful client and massive growth rates that SoFi does? No. Do the fintechs have the massive amounts of diversification while also staying extremely compliant? No. Do the pure play technology companies have the first party data that SoFi does or the compliance that SoFi does to actually withstand new regulations like what is happening with Synapse? No. SoFi is a very unique company going after everyone's lunch in financial services. Will they win it all? No. Could they win most? Potentially. And that is what I'm betting on. But ladies and gentlemen, that's all. If you guys want to support the channel, subscribe down below. If you want to join the Future Investing Discord, it already has 700 users and we just opened it a week and a half ago. You can find that all down in the description down below. But thank you all so much for watching. Really do appreciate your time, and bye for now.